And it's time for our first Aquis growth company of the evening. Samarkand is a cross-border e-commerce company dedicated to connecting Western brands with China, the world's largest e-commerce market. SMK was founded in 2016, and its mission remains to make Chinese e-commerce simple, accessible, and profitable for brands and retailers of all sizes. Samarkand currently has a market cap of around £92 million, and the company raised £17 million recently, with which it bought a UK health brand, it opened an office in Japan, and meanwhile sold a share stake in the business to a giant Chinese distributor. London South East is delighted to welcome the CEO of Samarkand Group, David Hampstead.
Thank you, Donald, very much. Thanks for the warm introduction. And yeah, I'm very much looking forward to introducing the business to everyone this evening. I'm just going to share my screen now. Great. And it's good to see you, Alasdair. And thanks for the introduction, Donald. Yes, Samarkand Group, we actually started back towards the end of 2016. My business partner and I, Simon, we spent some time in China with a friend of ours who had been somewhat a pioneer of the cross-border e-commerce industry that was just starting to flourish around that time. He'd launched a very successful Australian health brand into the market through this route. And what he'd seen is there's a lot of demand, a lot of interest for European brands, but the European companies tended to struggle with the market a little bit more than their Asian counterparts. Business culture, understanding of the market, geographical distance, but also the main issue, the incumbent model, whereby a brand would need to find a local distributor, sign over a large part of their margin, a effective control of their brand as well, sometimes for 3 or 5 years on an exclusive basis, was quite a difficult decision for a lot of brands who have a lot of potential to make. So it puts off a lot of brands from going into the market, and those that do go in don't always have a great experience using that model. So we returned to the UK with the vision that we would create a way for brands, international brands, to sell into this market as easy as they can do from their own website. Since that time, we've made some considerable progress. We have an office in London and Shanghai, and as Donald mentioned, we've just announced opening our office in Tokyo as well. We have about 100 employees spread equally between the UK and China at the moment. We have 2 distribution centres, one that we operate ourselves, our own warehouse and our distribution centre in South London, and a third-party operated warehouse in the Shanghai Free Trade Zone. We have triple-digit revenue growth, and we operate a number of different e-commerce storefronts and solutions on behalf of both our own brands and third-party client brands. And we do all this through what we call our Nomad technology platform, which is a proprietary technology platform that we've built. We recently listed onto the Aquis growth market on the Apex segment, and we originally targeted £10 million. I'm pleased to say we were more than twice oversubscribed. So we ended up raising £17 million. We had a very good institution and private investor split. It was cornerstoned by Schroders, and we had some very good other institutions take part in the IPO as well. We also had a strategic investment from Invenfin, which is the growth capital division of Remgrow. And going into the IPO, we had almost 15% of the company owned by employees, and no employees, no founders, no previous investors. Nobody cashed out any shares at all at the IPO as well. So it's all growth cap. A few weeks ago, we closed a further £3.1 million investment from China's leading express logistics company, a company called SF Express. They trade on the Shenzhen Stock Exchange, a market cap of around 34 billion. They are very well known. The DPD of China, I suppose, is one shorthand. If you're a Chinese consumer and you've ordered a product online, there's a good chance that SF Express will have delivered that for you. They employ well over 120,000 people in globally. We've been working together with them for some time in a commercial relationship, and then last year we created a joint solution using their second to none logistics network and our technology to roll kind of a joint solution out to merchants and larger enterprises in the West that want to enter this enormous e-commerce market that is China. In terms of size, it's if you take the next 10 e-commerce markets and combine them, that's still not the same size as China. It's a very large market, but it's a very complicated, it's a different ecosystem. There's no Amazon. Instead, there is local equivalents like Tmall and JD. There's very little penetration of Western payment methods, Visa, MasterCard, it's WeChat and Alipay. Social media is very different in terms of the technologies used, although the trends are familiar. There is no Facebook, Instagram, or Twitter. Delivery, when it comes to e-commerce delivery, DPD, FedEx, these kind of companies don't have anywhere near the same level of familiarity and penetration that Chinese companies have. So it's a very complicated market for these brands to enter. And so what we've done is we've created a technology platform and a range of managed services that allows us to encapsulate all that cost, all that complexity, and provide it to our clients and use it on our own brands as well. We essentially break that down into three core solutions that we offer. The first is what we call Nomad Storefront. This is where we build and operate stores on behalf of our clients on the dominant e-commerce platforms in China, platforms like Tmall Global, which you could roughly equate to Amazon, Little Red Book, which is a bit like Instagram, but with much more mature e-commerce offering, a number of other e-commerce platforms where we are integrated. And the way this works is if a Chinese consumer purchases from any of these platforms, the orders will flow into our Nomad system, and we can fulfill those either from the UK, from our bonded warehouse in China, or if it's an Alibaba property, it would go from an Alibaba bonded warehouse where we've placed stock. So that's a great solution for brands that have the appetite and the budgets to open a dedicated store on a platform, one of the main platforms in China. There's lots of other brands that aren't at that stage yet. And for them, we have another solution, which we call Nomad Distribution. And this is where we're leveraging the power of the social commerce industry in China. Social commerce in China is not really like anything we have here yet in the West. It's exploded in recent years from $190 billion to $560 billion in 2 years. It's driven a lot by the popularity of apps such as Douyin. We kind of refer to that as TikTok in the West, WeChat, the near ubiquitous messaging app in China. And what that means is influencers, celebrities, key opinion leaders, like the lady in this video, can take our products, put them into her live streams, into her videos, into her social media posts, and then her fans and followers can purchase directly from these apps. Orders flow into our system, and again, we can fulfill from one of our warehouses, either here or in China. And this really opens up an enormous opportunity, both the technology that's integrated with these platforms, but also the managed service that we provide, reaching out to these influencers, managing these influencers, growing our influencer pool, providing them with the products and the information so that they can effectively sell. And that's great for a lot more brands. There's a whole addressable market of smaller, perhaps niche brands as well that would love to sell in China, but need to be able to take their first steps on a low cost, low friction basis. And for that, we've created a software as a service plugin called Nomad Checkout. This is works with Shopify and Magento and WooCommerce and other plugins on the way for Western merchants who want to use their own e-commerce infrastructure to take their first steps into the market. And the benefits for a Chinese consumer to shop on a brand's own website are obvious: better prices, a guaranteed authentic product, which is a big concern for Chinese consumers. But the barriers are also quite considerable. Facebook, Instagram, Google, Twitter, these are all blocked in China. So what happens is when a Western website is loading, most of them have these scripts and tags as part of the website, are getting blocked, and as a result, the site's load quite slowly or sometimes not at all. So that's the first barrier that the consumer has to overcome. Second, when they get to the checkout, they're presented with Western payment methods, MasterCard, Visa. People in China don't use these, less than 1%. So instead, WeChat and Alipay are the dominant payment methods. So if they manage to get to the checkout, they still can't actually pay. They get past that, then they're presented with Western payment delivery options. Obviously, most Western merchants use DHL or DPD, etc. These are not as familiar to Chinese consumers as the local equivalents like SF Express. Fourthly, most brands, if they are selling to China, currently will be sending through the mail system. This is not part of the government's fully integrated cross-border e-commerce system. So inspection rates can be as high as 20%, and if the parcel is found to be not declared correctly, the consumer is then asked to pay an additional 20% duty, which leads to a lot of customer service headache for merchants and a pretty rubbish experience for the consumers. So Nomad Checkout is a piece of technology that solves all of these issues in a single plugin. On the right, with our technology enabled, we're preventing these scripts from even attempting to be loaded. So using our technology, the sites load in 5 seconds as opposed to 53 seconds without the technology switched on. So the first hurdle is cleared. The consumer can actually shop on the site. If we detect that they're coming from China, we inform them that their parcel will be delivered with SF Express, the #1 logistics company, and that they'll be able to actually pay using their preferred Chinese payment method, either Alipay or WeChat Pay. They can then shop the merchant site as they normally would, and when they get to the checkout, they'll see a Checkout for China button. This allows them to go through our checkout process, which is optimized for Chinese. It takes the address in a Chinese format. It's in Chinese language, obviously. It takes the Chinese ID card, which is necessary for a valid cross-border transaction. And it allows them also to then pay using their preferred Chinese payment method, which is either Alipay or WeChat Pay. Just wait for the video to catch up. Once the payment is complete, they are then sent a tracking link via SMS from SF Express so that they can track their order from merchant to their delivery. They'll also receive a tracking information from an order confirmation from us as well. And what's happening behind the scenes is we've pre-registered this order with Chinese customs so that when the parcel arrives at the port of entry, it's expedited, it goes straight through. There's no need for any additional customs duties. We're able to take advantage of the preferential 9.1% customs rate on cross-border transactions. And as a result, what this means is delivery times reduced from sort of 15 days down to 8 days, and customs stoppage rates from 20% down to less than 1%. It's also very easy for a merchant to install. There's plugins for Shopify and other platforms, and there's no change to a merchant's workflow or any business processes either. On the financial highlights, just quickly, these are the numbers that we put out as part of the roadshow for the IPO. We will have a trading update coming out towards the end of this month, but we were able to fund the business quite organically. Prior to the IPO, we had about £3.3 million of investment, from which we generated £27 million of revenue and almost £14 million of gross profit. These are numbers back in November of last year. Our growth, we went out with 8-month audited numbers for the IPO. 2019, 8 months was 3.8 million. That had increased to 10.2 million on the bottom graph. If you look at that, that's more accurate. That's the like for like. The actual revenue was 16 million, but we had a 5.8 million pound exceptional revenue last year as well. So like for like comparison, 3.8 to 10.2. Gross profits improving as well from 35% in March 2019 year end to now 63% if you take out the exceptional revenue. And we expect that gross margin is increasing as we bring on more and more of our technology-based revenues. Just a quick summary. We have triple-digit revenue growth and improving gross margins. We have a strong institutional, strategic, and employee shareholder base. We're well established both in the UK and China, and soon to be Japan as well. We have a very experienced and relevant board of non-executive directors, including Keith Higgins, the Chief Customer Development Officer of Unilever. He's headed up their global e-commerce strategy for the last 10 years. Jeanette Hearn, the CFO of Smolon, which is a 80,000 person retail service company. And Tanith Dodge, our chairperson, the former group HR director for Marks and Spencer's, are all NEDs on our board. We have strategic partnerships with industry leaders such as SF Express. We operate in one of the fastest growing industries in Chinese e-commerce, and we're well placed to benefit from the macro trends and changes that we're seeing with Brexit, merchants from UK and Europe needing to reach new consumer groups and new markets. And with COVID, the acceleration towards e-commerce, we're very well positioned for both of those macro changes. So that's the the end there, Donald.
Let me ask you about Japan initially. You've literally just opened in the last few days an office in Japan. Strategically, what does Japan mean to you as a market, and how does having an in-country office actually help to grow long-term relationships inside Japan?
Yeah, you're right. That's very recent news. So, currently we're quite UK centric. Most of our clients are from the UK. So we've, because of where we've grown up. But Japan is a much larger market with China, about 20 times the size of the cross-border e-commerce that happens between the UK and China happens between Japan and China. And what we've seen is as part of the result of the pandemic is that Japan previously relied a lot on Chinese tourists visiting Japan and shopping offline in Japan. As a result of the pandemic, that has stopped. So there's a lot of demand that we've been picking up on for probably the last 12 months from Japanese brands, potential clients. We have as our managing director in Japan, a man called Simon Truss, who was the managing director of SF Express in Japan for many years. He's taken on the role of our managing director in Japan. He has a very extensive network of retailers and brands in Japan. So that was why it was chosen as our next strategic move. It's yeah.
Will you actually be having a Nomad in Japanese for the Japan China e-commerce?
Yep. So we can replicate exactly what we do. In fact, we've already done some test shipments from a pilot project with a large Japanese retailer, successfully using SF Express through our customs compliant flow from Japan into China. So we managed to do that without establishing the formal presence. So yeah, we can do exactly what we're doing from any international market, really.
Okay, so let's talk SF Express. It's important not to, I think, put too much into that, but it's very interesting that you actually had a share stake bought by such a the number one, as you said, the number one Chinese distributor within China. How much did they pay for it, and what did they get?
They paid 3.1 million. They invested 3.1 million pounds. They got 5% of the company. They are a shareholder. They don't have any board seats or anything like that, as you would expect. They've been a very good commercial partner for us. I mentioned we've developed a kind of a joint solution that we're using, which I hope to be able to announce relatively soon as well. More details on that. But having a large Chinese enterprise as a strategic partner and investor is definitely something that is beneficial if you are an international company doing business in China. I mean, there's no.
Do you see them as a local mentor, perhaps?
I mean, they have a very extensive, not just delivery network, but they have a very extensive relations network. You know, they have an entire division for customs relations. You know, they're bringing in hundreds of millions of parcels. Important for anybody that's involved in import-export in China to have those kind of relationships. So we are very pleased to pull that deal together. Yeah.
And are you able to, when you're going in and pitching to Chinese companies, are you able to use them as part of that? Use their brand as part of that process?
Yeah, it's a very well-known brand. It's helped. It's a good point, actually. It wasn't a main consideration, but it definitely helped. You know, not just when we're talking to other large Chinese companies, but also when we're talking to potential employees or other partners that we might work with. Having a household name Chinese company as an investor definitely helps with credibility in China as well. Yeah, it's a good point.
Andy Morrison is asking about the liquidity. He says 70% of the Samarkand funding went to institutional investors, which on the one hand, I'm sure you were very pleased about. But on the other hand, once they've put their hands on your shares, they ain't going to be selling them in the short term. So liquidity, there's not much of a free flow, which is what he says. And how can you improve liquidity? What are your thoughts on that?
So yeah, I may have the number wrong, but it's give or take. Our free float was about 40% going into the IPO. So 25% was the minimum. We went in, I think, with a lot higher than that. The liquidity, I guess that maybe is I mean, we're doing quite a lot of this kind of investor relations. We've had a very good response since the IPO. Our share price is up 50%. We listed at £1.15. We're now trading around £1.72. So we've had some.
So you may well say, what's the problem?
Yeah, we're pretty happy. I mean,
it all seems to be working
with,
fine.
Yeah, it seems to be working just well. It's early days for us. We're a couple of months into the journey. We're having trades every day. Some of them could be quite large. Actually, we had some quite large days as well. So yeah, at the moment we're pretty happy with where that's been.
Very good. A follow up from Andy Morrison. What are the KPIs that you use and that investors can use to follow progress with the company? In other words, how can what are your own benchmarks that you benchmark yourself against, I think?
Yeah, I mean, we're a growth business. We raised this money to grow the business. We're in a fast growth industry. We're not. We're more looking at top line revenue growth than we were actually profitable last year, but that's not our focus. We're really looking to invest for growth. So top line revenue is a key indicator for us. But not at the cost of gross profit. That's another key indicator. I think what you'll see is our gross profit number improving, our gross profit percentage improving, and that is an indicator that more and more of our technology, the high margin technology revenue, is coming on stream as planned. That's the two kind of top line.
Great. Now my last question to you for the night. You raised 17 million. Some of it was spent on fertility and pregnancy nutritional products. Why is it a good time to be exporting quality nutritional branded products to China? Why do those go down so well in China, whereas you might go, hey, it's just another branded nutritional product for babies? What's the problem?
Yeah. Well, particularly with babies, anything that you ingest, anything you put on your skin, there is still a trust and credibility issue with a lot of domestic brands. That is improving, that is changing, but Western brands, especially in the health and beauty category, are seen as unadulterated, higher quality. So we own a digestive health supplement brand called Probio7, which we launched into the Chinese market. It was a small brand. We acquired it when it was doing about 1.2 million pounds of sales in the UK at the end of 2017. 2018, we worked on the brand and we launched it into China in 2019. Revenue of that brand, we increased it to 3.5 million pounds in a relatively short space of time. 1.6 million of that has come from our China sales, within that 12 months of launching. So there's a big demand, there's a big growth opportunity. Our strategy is called buy in the West and build in the East. The fertility supplement brand that you mentioned there is a complementary brand. It's designed for supporting fertility. China is now the largest consumer of assisted reproductive therapy in the world. I don't know if you saw last week, they announced a 3-child policy. They have a real demographic time bomb on their hands that they're dealing with, and yes, these kind of health
demographics. The population is in decline in China for the first time ever.
Yeah, the population has now fallen below the low line. So we saw a big opportunity in everything we're doing. The data, the market intel, the sales channels we have in China. A real opportunity to kind of arbitrage brands from the West, do what we do with them, improve them, get them ready for the Chinese market, and then inject them into the system that we have in China. So that was continuation of that strategy.
Great. David Hampstead, CEO of Samarkand Group. That was fantastic. Thank you so much.
Thanks for the opportunity, Don.
No, that was absolutely fantastic. It was such a pleasure to see people doing such go ahead things.
Well, I think as a country, we need to find new trading partners, and China's are very welcoming, and Chinese consumers are very welcoming to not just British brands, but all international brands at the moment. So
thank you so much, David. I'm going to say goodbye to you now.